Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, January 30th. We got a couple items on the economic calendar, so let's jump right into it. Oops, sorry about that. Economic calendar. We got the first report of the jobs numbers. So remember, this week we have the ADP, which is today. We had a revision from it was at 271 the last reporting for the month of December, and it was reduced by 8,000 down to 263. This one came in at 213 for month of January, which was much higher. It was projected right around 170, 180 range, and those were the whisper numbers for the ADP, and it came in at 213,000. So a very strong number there. So this leads us up into Friday's numbers when the Bureau of Labor Statistics, for short BLS, will be releasing their numbers. And if you recall, a few weeks ago when we had the initial jobless claims, we had a really low number, like I think under 190,000 or a really low number. And that was the one that they were going to use for their sample week that is used as a part of the equation to come up with their job numbers. So that's going to look pretty tight in coming this Friday here that we could probably have or at least expect a large number there, or a pretty good number there. To move on here, we got the pending home sales for the month of December. Back in November, it dropped 0.9%, and some whisper numbers were they thought it would increase by 0.5%, but instead it dropped by 2.2% pending home sales. So, if you recall, the stock market around that time period was kind of declining for a while there, and that may have put a barrier on people's a confidence level in buying big purchase items. So when you're seeing your stock portfolio reducing, you probably may not want to go out and buy big ticket items like homes, autos, stuff like that. So that might be a place. But I think it's going to be interesting to see when you look at January, February, March numbers. Maybe not January as much because we're so close to the holidays, but at least February and March, I think we're going to maybe see a much stronger home sales. And even NAR's Lawrence Yun had came out and said he's projecting a pretty good home buying season for 2019. And so far, from conversations and with other realtors out there, it seems like there's more inventory out there, and we have the buyers are out there buying. So it could be a pretty good season for home sales. Let's kind of move this forward here. And we got the stock market is up today. It's taken a skew a lot from the Q4 earnings. We had Apple releasing their earnings that came in much better than expected last night. This morning, it kind of even added fuel to the fire. Boeing came in with not only good reports, but also they came up with an upbeat outlook for the year. And so that's kind of helping investors. Now, this is just on a precipice of that, or not precipice, but on the I guess precipice for the FOMC meeting. They are wrapping up their meeting at about 11:30 Pacific Standard Time this morning. Fed Chairman will go ahead and announce any rate hike, which we're not expecting because we've been hearing them over the past months talking about how they're probably going to be more patient, but they're going to be giving their announcement at about 11:30 Pacific Standard Time. Now, what they're going to be looking for is any pace of rate hikes this year. We saw before like 3 or 2 rate hikes initially, but that may decrease. We may not even have a rate hike this year because what we're looking at is the macro level, the global slowdown, and U.S. is still going pretty strong, but the global at some point it will probably affect us as well. It generally does. Everybody's so intertwined that at some point it will affect the U.S. Economy. So the Fed doesn't want to put us into recession, but again, that's something that they're going to be watching. The other thing is they're looking at the quantitative tightening. There might be, they're going to look at see if they're going to continue that pace, working on the balance sheet. So what they were doing in the past, when they were trying to stimulate the economy, they had that quantitative easing, easing, and what they would do with the QE, they were buying mortgage-backed securities and treasuries, and those were increasing their portfolio, their balance sheet. And then even when they would mature, they would go ahead and reinvest those dollars. Now what they're doing is they're not really selling, but so much not reinvesting the dollars into it. So their balance sheet's coming down further and further and further. And that's what they're trying to do. So they're trying to see if and that's kind of a negative effect on the stock market as well. Negative effect on the stock market, even mortgage-backed securities, because there's less demand. So therefore, the rates are kind of rising as a result. So they're going to be watching any clues about that, because they did put that on the table. Some past conversations put that on the table that could be affected as well. They may reduce or pull back on that. So those are the things that are going to be looking for later this afternoon. So again, stay tuned. I'll put that on Twitter once I get the news and any information from there, any highlights. I'll put that on Twitter. So follow me on Twitter at the end there. So the bond market, we had a good day. We boosted above there. We were poised for some improvement in rates today, but because we are lower, we're down about 6 basis points. We're testing these Fibonacci and the 25-day moving average. It could, we're about kind of pretty close, about the same where we left off yesterday. So pricing is about the same as yesterday. We did see some improvement in pricing yesterday, but from the previous couple of days, but from yesterday to today, not enough to really garner any additional improvement. So now that could change after the Fed announcement. So if there's stuff in there that the stock market right now we're kind of taking our cue from the stock market, and if the stock market does well, then this could potentially drop below this double support here. If stock market doesn't like it as much, we could get a little bit of a rally. So be careful. Be careful of the volatility here. Mortgage-backed securities, it fell below its 25-day moving average. Now it's trying to push up against it and try to fight its way back above it. Again, this could be in the same boat as the mortgage-backed securities. If it stays below it, we got more room to the downside, which could help mortgage-backed securities push itself to the upside, which would improve interest rates. So that wraps it up. Rates are about the same as where we left off yesterday. Anything changes, the FOMC, I'll be posting on Twitter, so you can follow me at Mike Bjork on Twitter. You guys have a great rest of your day. Thanks so much for watching. See you guys tomorrow. Bye.